Welcome, good people. We are going to discuss the ATD Level 1 Introduction to Financial Accounting paper that was done on August 2021. August 2021 Introduction to Financial Accounting paper for ATD Level 1. And specifically, we'll look at question 4, which requires us to come up with the statement of profit or loss for the year ended 30th September 2020. And statement of financial position as at 30th September 2020. So we'll go straight to the question. The following trial balance was extracted from the books of KASNEB Limited as at 30th September 2020. Bank balance 800, trade receivables, consider figures there, trade payables. This is opening inventory, land and buildings at cost and its accumulated depreciation, equipment at cost and accumulated depreciation. Retained earnings, general reserves, ordinary shares of 100 shillings each, 10% debentures. Purchases, sales, carriage inwards, carriage outwards, debenture interest paid, salaries, business rates, office expenses, sundry expenses, and directors' remuneration. So we are supposed to come up with the, these are company accounts, just from the information we have here. You can see directors' remuneration, then we have ordinary shares. These are company accounts. Okay, so we continue. Additional information. Closing inventory, that is inventory as at 30 September 2020, was valued at 1.7 million. Half year interest on 10% debentures was outstanding as at 30 September 2020. The following information relates to the company as at 30 September. Accruals, business rates 200. Office expenses 25, then depreciation on land and buildings 5% straight line method, on equipment 15% straight line method. Then the directors have proposed that the ordinary shareholders be paid 5 shillings per share after transferring 1 million to general reserves. Tax charge for the amount of 10 million. This was outstanding as of 30 September 2020. So then we come up with the two books. The first step is always check the additional information. Make sure you master what is in the additional information, because these are likely to cause confusion, especially when you leave out any one of these items where it's supposed to be. So make sure you internalize each and every item in the additional information so that you don't leave it out. Some of us have prefer actually working on them first, but even if you work on them, internalize so that you know exactly what the additional information contains and where it's supposed to feature. So we'll go through the additional information again before we start. Inventory, this is closing inventory. Then we know there's something about debentures. Then we know we have accruals, business rates and office expenses. Accruals we just add to we debit the P&L account, and then it will also have an effect on the financial position of the business, especially on the liability side, because they have accrued. And then of course we have the depreciations, which affect the profit and loss, and they also affect the non-current assets. Then directors, this one will affect the appropriation account. Tax charge will also affect appropriation account, and the statement of financial position. So let's start. Don't think if there's much here. Let's start. We get the title of the question. This is KASNEB Limited, and we are preparing the books as at 30th September 2020. So simply come here. We'll say solution. 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 So we say KASNEB Limited. That is the name of the business. KASNEB Limited. Then we say income statement. Income statement. for the year ended, 30th September 2020. I think that is the year, 30th September 2020. So it's always good to underline. So underline this to show that it's the heading. So underline like that. And then preferably 3 columns. 3 columns are good. 3 columns are good so that you can show your workings well. So you can have 3 columns like that. And then of course, an income statement, we start with the trading account, then we go to profit and loss account, and then we go to appropriation account. Now the contents of the trading account are very simple, only 2: sales, cost of sales, and we have the outcome, gross profit. So we simply come here and check on sales. Do you have sales? Yes, sales is here. Do you have any workings on sales? The common workings on sales are sales returns. You've sold and the goods have come back. So check if you have sales returns. We don't have sales returns, so it means we just pick it as it is. So come here and say sales, and sales, the figure is 161,600. And since there's no one working on it, just bring it to the outermost column straight. And then we list now what? The cost of sales. Under cost of sales, we have the opening stock. So let's get the opening stock. Normally opening stock is captured in the trial balance. So opening stock, it's here. You can see the year 2019. Opening stock is 29,000. So capture it as it is. And because we are working on the cost of sales, it has some working. We are going to have it in the inner column so that the total will push to the outer column for us to now get the gross profit. So 29,000. Then we add purchases. So check purchases, and purchases normally has workings. The common workings on purchases are carriage inwards and return outwards. Yes, carriage inwards and return outwards. So we check if we have those 2. Otherwise, you might also want to check on the additional information if there is anything that affects the purchases. But if there's nothing, you just proceed with the question. So here we'll pick purchases. You can see purchases is here 82,100. We have carriage inwards. You can see 300. Carriage inwards are the costs that are associated with the purchases to basically transport what has been purchased from the creditors or suppliers' plates to your premises. Do you have return outwards? I'm looking for return outwards, and looks like we don't have return outwards, even the additional information. So we only have purchases and carriage inwards. Purchases 82,100. Carriage inwards is 300. So that's what we'll have here. So we add purchases. And since it has workings, we bring that in the innermost column. Then carriage inwards is 300, like that. And then we get the total, which is 82,400, like that. And then we now list what? Closing stock, because cost of sales is simply opening stock plus purchases minus closing stock. And closing stock, that figure can be found in the additional information. It's here. So 31.7. Please make sure you remember the zeros are restricted. So this is 31.7. 31.7. So 31.7. And this is less. So this will be 29,000 plus 82,400 minus 31,700. That gives you 79,700. Now see, this is the cost of sales, and we are deducting it from the sales to get the gross profit, 161,600. Gross profit is simply sales less cost of sales. That's what we've done here. So 81,900. That's the figure that we have over there. This becomes our gross profit. The next thing is to find out if we have any income and gain, because we're now going to the profit and loss account. Do you have any income and gain? So go through the question, because after adding the gross profit, you simply add the incomes and gains. So I'm checking if we have any incomes and gains. So far we don't have any. In the additional information, there are not any incomes and gains. So we go straight to expenses and losses. We've confirmed there are no incomes and gains. So we go straight to expenses and losses. Expenses and losses. Like that. So under expenses and losses, we go back to the question. Sorry for that. Expenses now. Right from 10% debentures can get that's an expense interest payment there. But let's start from here. We'll come back to the debentures because there's some additional information affecting debentures. So carriage outwards, of course, this is an expense, 700 shillings. So carriage outwards, that's an expense, 700 shillings. So carriage outwards, 700 shillings. Let's put it in the inner column. Then we have debenture interest paid. Now, debenture interest paid, there was some markings on debenture interest paid. Debenture interest paid 600. There was something here. Number debenture. Number 2, a half-year interest on 10% debenture was outstanding as at 30th September 2020. A half-year interest on 10% debentures was outstanding. So what did we pay? We paid 600, and then they're saying half-year is outstanding. So let's calculate the debenture. Debenture, let's come. Debenture is here. You can see this is where debenture is. So it's 10% debentures. 10% debentures. What this means is that the debentures attract interest. Debentures are long-term loans, so they attract interest at the rate of 10%. So 10% of 12,000 is 1,200. How much was paid? 600. So it means 600 is still pending. And I think that's what the additional information is trying to tell us, that a half-year interest on 10% debentures was outstanding as at 30th September 2020. So we only paid 600. 600, which is half-year interest, is still pending. So in such like cases, with the accrual concept, we will go for the 1,200 because we are interested in what was actually incurred that year. And in this case, it is 1,200. We are not interested in what was paid, what was actually incurred for that year in accordance with the accrual concept. So we'll simply come here and say debenture interest, 1,200, like that. Then we move on. Salaries, 38,500. Have I seen anything on salaries? No, I have not seen anything on salaries. So salaries, 38,500. Come here, salaries, 38,500. Salaries, 38,500. Next, business rates, 1,500. There's some workings on business rates. Business rates, 200 is still outstanding. Accrual, 200 is still outstanding. So business rates, 1,500 and 200 is still outstanding. So we'll come here and say business rates. Because it has workings, we'll have to show that in the innermost column. So accrued rates, 200, then we get the total, 1,700, like that. So business rates, 1,500, but we still have an accrual of 200. So we get the total for that year, which is 1,700. We only paid 1,500, but 200 was still outstanding. So the total incurred for that year was 1,700. So that's how we go about it. Office expenses, 900, but we also have 25 still which accruing, which have not paid. So we get 900 plus 25. So office expenses, 900 plus 25, like that. So we'll come here and say office expenses, 900, and then accrued office expenses, how much? 25. This gives us 925, like that. Then we move on. Director's remuneration 11,900. I've not seen anything that affects director's remuneration. So director's remuneration 11,900. Notice that if it doesn't have any workings, we push it straight to that central column, mid column. Okay. Do you have any other expenditure that has been left out? I think we had left out the venture, but we have so far dealt with it. All this. So inventory check, additional information. Number 1 is captured, number 2 is captured, number 3 is captured, number 4. Depreciation charge should be provided as follows. Land and buildings, 5% straight line method. So we come here, we say depreciation. So land and buildings at 5%. 5% of, and this is straight line, so we take 5% of the cost. 5% of the cost. So 5% of 80,000 is 1,600. No, it's 400 or something. 0.05. Let's get it. 0.05 times 80,000. That gives us 4,000. So 4,000. So the depreciation here, land and buildings, is 4,000. And then we have the next depreciation is 15% depreciation on our equipment, 15%. So it's 15% of 32,000. 15% of 32,000. Because it's straight line, we go to the cost. So equipment, 15% of what was the figure? 32,000. Let me just confirm to be sure. 15% of 32,000. That gives us 4,800. So 4,800. Equipment 4,800. And so this gives us total depreciation as 8,800, like that. Now, do we have any other thing? Number 5, the directors have proposed ordinary dividend, that's appropriation. The tax charge for the year amounted to 10, that is appropriation. So we are done with this. Let's just get the total. This is 700 plus 1,200 plus 38,500 plus 1,700 plus 925 plus 11,900 plus 8,800. That gives us 63,725. 63,725. So just check the figures again to be sure that we have captured everything. $63,725. So that will be our total. You can always go back just to make sure that you have captured everything. You can always go back just to make sure that you have captured everything. So carriage inwards, we've captured the bench interest, we've captured salaries, we've captured business rates, we've captured office expenses, we've captured sundry expenses, have we captured sundry expenses? Director's remuneration 11,900. Sundry expenses. No, you see, we've not captured sundry expenses. So we need to be very sure. So just always confirm, counter check your work to be sure. So this is 8,800, but it's not the last one. So we have sundry expenses. How much is sundry expenses? Sundry expenses is 200. Then check the additional information again. Always counter check your work very fast. Always counter check your work very fast. So yes, I think we don't have anything remaining. So let's have this 2,000. Was it 2,200? So let's have that 200, and then we will be done. So let's get the total again. 700 plus 12 plus that 85 plus 1,700 plus 925 plus 11,900 plus 88 plus 200. So this gives us 63,925. Always counter check your work. 63,925. 63,925, like that. So then we less minus 81,900, that gives us 17,975. 17,975. This becomes our net profit. This becomes our net profit. So the next thing is to, sorry. Sorry, this one has not picked well. We'll just delete it and have it somewhere. Sorry for that. Okay, so we'll do it again here. 63,925. So we had gotten 17,975. 17,975 as our net profit. Okay, so let's continue now. We'll go to the appropriation part. And appropriation part, we are going to subject this to tax. We have tax here. And then we also have the directors have proposed that the ordinary shareholders be paid 5 shillings per share after transferring 1 million to general reserve. So we are going to transfer some amount, 1 million to general reserve, then pay shareholders 5 shillings per share. How many shares are we talking about here? Ordinary shares of 100 shillings each. 100 shillings each. The amount is 70,000, is it? Yeah, this amount in question is 70,000. I think, if I'm not wrong. Yeah, it's 70,000. So that means we have 700 shares. So 700 times 5. These are 700 shares. 100 each, and we have 70, valued at 70,000. So we have 700 shares. We have just divided. So 700 times 5, because each share will attract 5 shillings. So that is 3,500. So simply come here. Tax charge 10 million. That is 10,000. Remove the zeros. Transfer to general reserve 1,000, and then the director's proposed ordinary dividend will be 3,500. So that's what you're going to have here. Come here and say corporation tax. Corporation tax. How much? Corporation tax 10,000. Then transfer to general reserve. General reserve. That is 1,000. And then lastly, proposed ordinary dividends. 5 at 5 shillings, and there are 700 shares. So that gives us 3,500. When you add this, you get 14,500. So we less this from that, we'll get 475.3. 34.75.3. So we can call this the retained earnings for this year. Retained earnings for the year 2020. Retained earnings for the year 2020. So that's how we go about it. So that is the appropriation account part of it. Basically explains how the net profit will be utilized in the business. So then, after that, we go to the next book. We are done with the first part. So statement of financial position. And as usual, we'll start with the heading, Kamwea Limited. So Kamwea Limited. Kamwea Limited. Then it says statement of financial position. Statement of financial position. As at 30th September 2020, like that. As at 30th September 2020. Good. So there we go. And as usual, preferably we need to have 3 columns. Shillings. And we restrict the zeros. Then of course we start with the non-current assets. Non-current assets. And our non-current assets here, the ones that we are very sure of, are just here: land and building and equipment. So we have land and building, and we also have equipment. So for land and building, we take the book value. The book value for land and building was 80,000, and then 32,000 for equipment. So 80,000 and 32,000. So we pick them as they are: 80,000 and 32,000. Then the accumulated depreciation. So far, before the start of this year, the depreciation was 8,000. Accumulated depreciation for land was 8,000, and for equipment was 96. So we add the depreciation for this year. So 8 and 96, and then we add the depreciation for this year. So for the first one, land 8,000 plus 4,000. This 4,000 is the depreciation for this year, so it becomes 12,000. So for this one, 12,000. And then for equipment, it had depreciated by 96. So 96 plus 48. 96 plus 48. What do we get? 14,400. So this one had depreciated by 14,400. You simply take the accumulated depreciation over time plus the depreciation for that year, and you'll have this figure. So then 80 minus 12, 68,000. 32 minus 14, 4. That gives us 17,600. 17,600. So that is the value. So you get these two, add the two, you will get 85,600. So that becomes the value for our assets, 85,600. And let's see if we have any other asset. So let's just go back and confirm to be sure. It's always good to be sure. Do you have any other non-current asset? No. From the question, we don't have. I've just confirmed there is none. So we go to current assets, and the current assets we start with the bank balance 800. So current assets, we start with the bank balance, and it is at 800. And then of course we go to accounts receivable. I've seen you have accounts receivable. I've also seen you have inventory. These are the common current assets. So accounts receivable, the debtors, they also called trade receivables. So 32,100, 32,100. Do you have anything that reduces the trade receivables? You need to be very keen on trade receivables. In most cases, there is something that reduces the trade payables, the bad debts, and the allowance for bad and doubtful debts. So since we don't have any, we just pick the figure as it is, 32,100. And then we go for the inventory. The inventory that we are interested in is the closing inventory. So it's 31,700. 31,700. So 31,700. So like that, get the total. The total will be 64,600. That is the total for that. Then after that, we go to current liabilities. So we again pick the current liabilities. And the first one we have here from the question is trade payables at 23,800. Trade payables 23,800. So trade payables standing at 23,800. 23,800. Then look for another one. Trade payables, inventory, all these. No. Retained, general reserves, ordinary, debentures. Yes. Remember, we had 10% debentures outstanding of half. We picked it as 1,200, 600 was outstanding. So this outstanding is an accrued amount. So we'll have outstanding 10% debenture, outstanding interest of 600. So we'll come and include it here. Outstanding interest of 600. Outstanding debenture interest of 600, like that. Then we go to the next item. Outstanding debenture interest 600. Then we go to the next item. Purchases, sales, carriage, we don't have any. Inventory, this one we've already captured, number 2. Number 3, now we have these accruals. Accruals 225, so we'll capture them. Accruals. So accruals here. We have business rates, 200. Then office expenses, 25, like that. All these are accruals, so they become liabilities that are supposed to be met within the shortest period of time. So depreciation, we've already captured depreciation. Then you have these proposed dividends, proposed ordinary dividend, that becomes a current liability, and even the tax that has not yet been paid, it was outstanding, that is also a current liability. So we'll come here and say proposed ordinary dividend. Proposed ordinary dividend. How much? 3,500. And then corporation tax. Corporation tax was valued at 10,000, if I'm not wrong. 10,000. The other 1,000 for that was transferred to general reserve will be captured in the finance by section. So this will be our trade payables, our current liabilities. So let's just get the total. Plus 600 plus 200 plus 25 plus 35 plus 10,000. That gives us 38,125. 38,125. Now, for us to get the net capital employed, 38,125. For us to get the net capital employed, you simply take net capital employed. You take the non-current assets plus working capital. Working capital is current assets, this figure here, current assets minus current liability, that is working capital. So net capital employed is non-current asset plus working capital, or simply non-current assets plus current assets minus current liabilities. So that's what we are going to do here. Add all those three. So 85,600 plus 64,600 minus 38,125. That gives us 112,075. 112,075. So 112,075, like that. That is our net capital employed. We hope that we have done that is going to balance, because I think we have just gone step by step and we've not left anything out. Financed by section. So this should also give us net capital employed that should automatically balance with the other side. So we'll start with the ordinary share capital. Ordinary share capital. This is obvious. Now what is financing the business? Ordinary share capital. And I think the figure was 70,000. I think the figure was 70,000. So since we have long-term loans, we will we'll have this in the inner column, 70,000. But this is subject confirmation. So ordinary share capital, let's just confirm. Ordinary share capital. I'm also going through the entire question. Yeah, they are here. Ordinary share capital is 70,000. I don't need this. Ordinary share capital 70,000. And then general reserves 12,000. General reserves. So come and say general reserves. General reserves. It's 12,000, but there is an additional reserve. Additional reserve of 1,000. So that makes it 13,000. See how my work is flowing? 13,000. And Then we go back to the question. We pick what retained earnings. You can see retained earnings. Now this is retained earnings 2019, 13,600. So retained earnings 2019, retained earnings 2019, and we also have retained earnings, don't forget, retained earnings for 2020. So for 2019, the figure is retained earnings for 2019, the figure is 13,600. So you come here, write retained earnings 13,600. 13,600. Then retained earnings for 2020, the figure is just above here. This is 3475, so we pick it like that, 3475, like that. Then do you have anything else? Retained general, I think you are done. It's only 10% debentures that remaining. So we come here, say long-term liabilities. Long-term, so let's get the total here first before we go to, we need to get the totals at that point. You can also say long-term liabilities, we say 10% debentures, and this figure is 12,000. So 12,000. So let's get the total here. 70,000 plus 13,000 plus 13,600 plus 3475. This gives us 100,075. 100,075, like that. So this is the capitalization section, 100,075. Then long-term debentures 12,000. So when you add, you get 112,075, and wow, our figures are balanced. So this is net capital employed. So we are good to go. Net capital employed, so 112,075. Net capital employed 112,075. You can see the balance sheet is balanced, 112,075. So we are good to go. This is it. We are done. How many minutes have we taken? We have taken 37 minutes. Ideally, you are supposed to take less than 30 minutes for this question. So thank you. Let's meet in our next question. Please share, subscribe, and success as you prepare for your exams. Thank you.